Welcome back to Mantle Mondays. I'm your host, Amar Varma, co-founder and CEO of Mantle. In the world of venture capital, everybody claims to be founder friendly and everyone promises value add. But there's a massive difference between a VC who understands a spreadsheet and a VC who understands the struggle and opportunity that's required on a 2 a.m. server crash. Today's guest is someone who understands both, and that's Matt Cohen, is the founder and managing partner of Ripple Ventures. Welcome to the show, Matt.
Thanks for having me, Amar. Great to be here.
Well, let's jump right into it. Give everyone a quick background on who you are, how you got here, and maybe 3 of the key events that have driven your life here.
Absolutely. Well, first I have to say I'm not so good at the spreadsheets anymore. I used to be. I'm much better at the psychological part of 2 a.m. phone calls from founders for some reason, but we'll get into that a bit later. Yeah, so I'm Matt Cohen, founder and managing partner of Ripple Ventures. I started the firm pretty much after spending a decade first in finance and capital markets. So I worked at the Big Blue Machine, Royal Bank of Canada, started off my career in equity sales and trading, started off in 2005. I spent almost a decade there, first in Toronto and then in New York during the global financial crisis. For some of the listeners who may be too young to understand, that was a pretty pivotal time in the capital markets and the global world. Banks were failing left, right, and center. People had to be saved by something called TARP. And the Canadian banks were some of the strongest financial institutions in the world because we were not over-levered. And we had some pretty strong restrictions on how we could use the deposits inside the institutions. And so working for RBC, I got exposure to some of the smartest and biggest hedge funds globally, trading on behalf of the bank's balance sheet, but also trading on behalf of some of the largest hedge funds globally. So focusing primarily on equities, some derivative instruments, as well as trading in the event-driven and arbitrage trading strategies of the public markets. So public markets was where I spent the first decade of my career. It was an incredible training ground for me on the financial side, business side, market side, liquidity, learning all those things, volatility, risk tolerance, things like that. But I never really had any exposure to like the word VC, private markets, and let alone startups. When I met, the team working at Extreme, like you and the team, like that was a whole foreign world to me. When I moved back to Toronto in 2012, I was just trying to find something to do when the markets were closed and everything was kind of quiet in the evenings. I was kind of bored. I had no kids. I wasn't married yet. And I was just sort of figuring it out. And I met with 2 college buddies that were actually thinking about leaving banking as well, got connected through a mutual friend. And I had seen while living in New York, there was this thing called Silicon Alley that was kind of popping up. It was the East Coast version of Silicon Valley. And that was in the days of like 2009, 10, 11, global financial crisis. The dust was settling. You had these sort of startup entrepreneurs bubbling up in New York at the time. And Toronto really had not much. As you know, it was mostly mobile gaming applications that were being built. There was no real B2B software companies that were just getting started. And so when we came together with 2 buddies and started Turnstile, that was the first opportunity I had to really get into the startup ecosystem. And I looked at it truly as an MBA. I was still working at the bank at the time. I had some savings from working there, obviously. And I took $50,000 and I basically gave it to the company and said, let's see what happens. The idea evolved over obviously the first year or 2. And eventually it became what it was, which was a Wi-Fi marketing and analytics business. The idea was Wi-Fi was becoming ubiquitous across brick and mortar vendors. People were giving it away for free at their coffee shops and hotels and bars, but they were not really leveraging the information you can get out of people connecting to your Wi-Fi routers, as well as the ability to create loyalty with people to come back and serve them with more, advertisements, coupons, discounts, things like that, and then taking it to the next level with social sign-on. So the ability to sign in, bypassing free Wi-Fi password connections and using your Facebook, Twitter, SMS systems to get in was the technology that eventually became Turnstile. And then that was acquired in about 4.5 years by Yelp, the public company.
Amazing.
And that was sort of what got me into tech and startups in the first place. I'll pause there and see if you have any questions.
No, I for sure. I love it. We're not quite the same age. Silicon Alley to me was one of those mid-90s kind of things that popped up. If I got my history correct, I think it was Jason Chervakis, Tom Watson, and maybe Jason Calacanis popularized it in Silicon Alley.
Yeah, exactly. And then you have like the MongoDBs,
right.
I think, popping up in New York as well, right?
Yeah. So I'm probably getting the names wrong and the times wrong, but there was also, I think, the Razorfish guy was there too, Craig, if I'm trying to remember this. But anyways, it's great. I think it's really important for people to hear that you've lived through all problems, all sides, and that really is a partner.
A little bit more than some investors in Canada, I'd say. I'd say the struggles that we faced, which were pretty obvious, like we couldn't raise capital. Peter Thiel wrote a check for $100 million into a company called Purple Wi-Fi, which was like a big competitor. So it scared off every single investor from even talking to us. We met with John Ruffalo at Omer's. We met with some of the family offices. We tried to raise capital. It was really hard. You just couldn't. So we had to beg, borrow, and steal our way to basically profitability, raising a little bit of like friends and family capital. And eventually the business got acquired, which was a great outcome. A lot of the shareholders, but also employees did very well. And they all moved to San Francisco, and I moved to Boston. And that's where I got real operating experience for a couple of years. And I worked for a company called Street Context on the sales side, learning how to sell large scale enterprise software to large institutions. And living in the Boston ecosystem was tremendous. I'd only lived in New York and Toronto. I never lived really in San Francisco. I never lived anywhere else. And Boston was an incredible place. It was a great hybrid between New York and San Francisco because it had the entrepreneurial and the academic ecosystems out of MIT, Harvard, and Cambridge. As you know, like there are some incredibly talented individuals, especially in the deep tech, the MIT lab space, the Harvard alumni group, everything is there. They eventually do leave, as you know, to go to San Francisco, but they all get started there. So I immerse myself in that ecosystem every single day. I was living there with my girlfriend, now wife. She was in, a residency program, so she was busy all the time. And I was just bumming around. I had free time. I went to all the pitch events. I went to all the investor events. I joined a bunch of groups, and I met a bunch of amazing family offices, which I didn't even know existed. I didn't know what a family office was. I remember sitting down with somebody for coffee at the Four Seasons. One, I've never gone to coffee at the Four Seasons before. I thought that was really strange. I thought you only slept there. Two, I realized that this gentleman, this young guy, was the Cohen family heir. Cohen Shoes was their great-great-grandfather. He was like fourth generation or something. And I was like, what do you do now? And he's like, well, we invest in venture funds and startups and private equity and all these things. And we manage a family office. And it just opened my eyes to this idea of like managing assets across different, classes of investments. And that's when the idea, after putting some of my own capital to work from the sale of Turnstile, which was a very good outcome, life-changing for me at the time. And I deployed half the proceeds back into the startup ecosystem as an angel investor. What I realized, though, living in Boston was nobody cared when Matt Cohen reached out to them on LinkedIn to talk about investing in their startup. I was nobody. So I had to come up with a name or a firm or something. And I came up with the name Ripple Capital. And that's what kind of started the idea of having a platform to basically invest in. I printed shitty Vistaprint business cards with the little drop, the Ripple drop on them. And I handed them out at meetings. I had a terrible Wix.com website built. I had a LinkedIn page and all these things, an email address and everything. And I just started meeting entrepreneurs, and it worked. I actually had some really good outcomes early on. My angel portfolio is what we call Fund Zero, was $1 million approximately deployed in capital personally. It's like a 6.5x DPI fund. It was fantastic.
Good
And
for you.
so that's where the family offices started coming around saying, hey, we should put our capital together.
Let me just pause you for a sec. Sorry, not to interject, but I think it's important to highlight a few things there. Couple things. One, just the diversity of the experiences from, being a public markets person to having curiosity in the startup world, to doing a startup, to exiting, to going and working at a company, to then going to all the events and meetups. You can't make this stuff up and compress it in time. It's a life journey. So I think it's, hats off to you for just
Thank you.
path. But when I talk to folks about how to get into venture, I say there's no path. You have to make your own path. And this is an example of like making your own path and doing it.
Takes time. Yeah, it takes time. And you also, as you know, follow the breadcrumbs, right? You can't really jump to the end. And that's what I tell our team now at Ripple when they want to start a new project. We have these things at Ripple we call the ripple effect projects. And that's everybody's individual passionate thing that they want to do that has to be bigger than themselves, that has to go on beyond their time at the firm if they end up leaving. And it has to have an impact on other people's lives, but it cannot be judged based on one time of success. So mine was the podcast, right? When I started the podcast Tank Talks, I knew like if I didn't go to 100 episodes, I was not going to know if this was good or bad. My partner Dom started the Ripple X Fellowship. That was 5-year commitment. We've started so many other things as well at the firm. And it's because I've started with a culture of do not assume that just because you're not successful in the first or second or third iteration of an idea, it's a failure. You have to play the long game. And that's something I just kind of thought myself when I started the fund, and my own journey into venture was like, okay, I'm going to screw up a bunch. I'm going to make a ton of mistakes, but I'm going to keep sticking with it and see what happens.
I love that. I think there's a propensity for people wanting to pursue perfection, like especially new in this business. People are like, oh, I need to build a track record of perfection. I go, this is a power law game. You find it when it comes, when you're always working on it, but when it comes, it comes. You can't engineer or manufacture it, right? Like
I have a
kinda,
great story on that.
yeah.
I met with obviously I was very scared to go raise capital for the first time. I didn't even know what that meant. And I'll never forget meeting with the very first like limited partner in our first fund. We met again at a coffee shop, a nice coffee shop, and he'd been investing in venture funds for a bit as a family office. And before we kind of got into the pitch, he said, "I have a question for you. It may be uncomfortable to answer, but how much cash do you have in your bank account right now?" I was like, "Oh, that's pretty intense. I don't know if I should answer that, but I know this person knows what he's doing. I'll answer the question." And I showed him. I pulled out my bank account and I showed him. And I said, "That's a pretty personal question. Why are you asking?" He goes, "Because I want to know you have the personal runway to make through this journey that's not going to be putting a lot of capital back into you. And you're willing to give it your all because I'm willing to bet on you as a first time VC." I was like, "Oh, wow, that is a long-term partnership right there." And so when I knew that as a kind of the people I was trying to meet with, I knew I had to show first before asking for anything in return, meaning like an investment or something or a capital commitment. And so with the first fund, I actually rolled my first 2 angel investments into the fund at cost, which were higher in value at the time, to show the LPs that I was really committed to this journey of running a venture firm. Not only was that a great decision for the LPs, the first one I rolled in, it sold as our first exit and returned half the fund. So the fund itself made a huge, gain on that roll. I personally did not because I was only a portion of that when the whole fund was put together. But it was a great, confidence builder for me and for our LPs. And that was the long game, right, being played from the start.
That's really important. And hats off to you. Like, A, having the conviction, B, knowing it's a long game, right? You see a lot of these folks moving around and like they you can't put a name to the firm that they're at sometimes for more than a couple of years. It's like there's a long-term aspect to this. And then there's a, selflessness of rolling warehouse things in there and stuff, right? Like I think that's a really important lesson. So was that your first LP?
Yeah. I mean, I was my first LP, but yeah, that was my first external LP for sure. And it kind of rolled from there. And that was another thing. Like when I meet with other VCs who are trying to get started now in their first fund, they have this like target, they have this number, they have this idea. And I'm like, just get started. Just like close what you can, put whatever you can into the fund for your first few investments and just go. There's no perfect number. So when I did my first fund, which was just 10 million, I think the first close was like 3.2 or something. And a majority of that was me.
Yeah.
So I just and I had like the first 5 investments done before we even got to the next close.
There's a cohort of folks kind of your vintage that are, fund 2 or 3, maybe 4 at this point, right? And they're all their stories are similar in that they were able to take the leap, I call it, right? And the leap wasn't like, I can't do it if the fund is less than X. And I go, that's like, you see that and you're like, it's a red flag. But it's like, I'm willing to do it. I've done stuff. Here's the track record. Here's what I'm doing. I'm doing this no matter what. Come join the party, right? Like that's kind of the best ones that I've seen.
It reminds me of the
Totally.
funds that have 0 management fee and 30% carry. Like you say yes all day.
Yeah, all the time.
Because you just know where their heads are at, right? They're so aligned. And I think that was something that I learned early from a lot of the private equity fund managers that I worked with or met in New York. I actually have them as mentors today. So I kind of modeled myself off the private equity mindset, because private equity, for people who don't know, they don't charge management fees on committed capital. It's only on called. Now, they call a lot of capital when they make investments, but it is a point of understanding that they do not get paid just for waiting. And so you have to do something to get paid to do something. And so that's where I think the private equity model has it right for their industry. And I wanted to model off that. Like, I wanted to show I was doing something no matter what the number was. The fund really ended up getting started after that first fund. My colleague Dom, who's my partner now, joined me as fund one as an analyst. We ended up making investments in a bunch of great companies early on. We really were B2B SaaS oriented, kind of 70-80% Canadian, some US investments given my exposure in Boston and New York. And we've expanded over time and diversified. We've invested over 55 companies. We've had 13 exits across the portfolio. We've had some great, breakout companies, and we've deployed over, I think, $75 million so far. So we're now, considered a establishing manager, and it's been a great journey so far.
Good for you. I love the ecosystem movement. I love like the torch that you're carrying. It's quite exciting as an outsider to watch it. And then the companies. What's changed since Fund One to today in the companies you're looking at? And I ask the world is moving so fast. What was fundable 6 months ago might not be in that target today.
Man, this question is just so
And
personal.
I'll ask it part B of it. How does a founder get attention these days, right? It used to be
let's start with that, because that's such a great thing. My team just came back from Socratica Symposium in Waterloo. They got immersed to all the amazing things coming out of Waterloo. As you know, it's a great hub for VCs and for people in general. And what I found really interesting about some of the presentations that we were seeing was there was some crazy frontier deep tech problem solving going on in these young founders' minds that I've never thought they would even have the gall to try to take on. I won't share some of the names of companies because we're obviously talking with them, but like some of them were like rebuilding the locomotive, like the entire train industry, right? Some of them were thinking about building like military grade farming containers so that you didn't have to deal with like supply chain risk, right? Like really, really complicated things. And maybe these things have been built in the last 50 years by other people, and maybe they're just naive, some of these young founders, and that's okay. But I think the chances of them having some intuition into a space that has never actually been looked at in 25 years is happening now because the cost of technology has just become radically cheaper. So for us, we've evolved tremendously from our first fund. Our first fund was like straight down the middle, B2B SaaS, don't fuck it up. Make sure your LPs know that you are looking at real fundamental businesses. And we had some crazier ones that in the time that we were doing that fund that LPs were scared of. Like VoiceFlow was definitely one that LPs were scared of. For us, it was a children's story Alexa telling application. It was called, StoryFlow at the time. It was crazy. But we had an idea that voice and Alexas and, the Google Homes and all that would be a communication vehicle for businesses one day. And obviously it evolved with voice AI and things like that. But the intuition was there for us. And the founders were the key to the story there. And that's where we've graduated to. As you know, there's founders that can just roll with the tide when things are changing so quickly and they can keep up. Or there are products that are great at a certain time, but they get lapped and they get sort of pushed to the back of the line. And that happens too in our portfolio, and it's really tough. So all of our pre-2022 ChatGPT kind of companies, they had to re-platform everything. It was really tough for them. So for us now investing in our newest fund, we think about 4 core things. The first thing is obviously the problem they're going after is validated outside of the founder's mindset. So we don't want to just take a founder's perception of a problem and say, this is a problem that only you know about and nobody else does. We have to externally validate that through our venture partners, through our, ecosystem participants and LPs and so on. The next is, are they technical as a founding team to execute on this vision? I don't want to hire engineers to come and build this with the team. I don't want just a business-minded founder and he's got to go hire a bunch of people to help build the product. There should be a technical founder inside the founding team, or else we're not interested. The other parts that we care about are two others. One is, can they recruit exceptional talent in today's world where it's incredibly hard to actually scale companies past like a seed stage company unless you have incredible talent? And how do you judge their recruiting capabilities? Do they have the network like you have? Have they been around exceptional, talented, engineers or product leaders before that they can recruit and join them from their last companies? That's a hard thing for students to do. That's a hard thing for young founders to do, but sometimes they can because they're surrounded by great minds, but that's a harder one for them. The last one is recruiting and raising. Raising capital is a skill. It's storytelling, right? It's process oriented. It's networking. Can they fundraise is a really important thing in today's age because so much capital is going into the winners and the leaders that even if you have a fantastic product and you don't know how to raise or keep investors interested in your company, somebody will come from behind, raise $100 million and just blow right by you. We've seen it happen time and time again. And it's hard because founders are very sensitive to raising, over delivering, or over promising with a fundraise, getting too much capital in where they don't know how to spend it. There's a total, trade-off there, but it is a thing that we need to understand they can do if they want to do it.
There's a couple things in there. I'd ask the leading question on what's changed and how do people get noticed. The thing I'll say about this younger generation, students, folks generally born after 2000, if that's a category now, they grew up not only digitally native with like they had a smartphone. They didn't know life without internet, right? Like it was never a thing, and they've accepted all of these next jumps and waves in technology, and it's theirs to shape now. And AI is obviously the one in front of them now. But the thing that blows my mind is you talked about the thinking and the depth of the thinking. A generation ago, it would have been like, here's the next incremental thing that's happening in enterprise, and we're going to disrupt the incumbents or something. Now it's like, we're going to get to space, and when we get to space, we're going to need these things. And it's just like, okay, this is awesome. Tell me more, right? It's like, well, we'll have to mine minerals. We'll have to get there. We'll have to bring equipment. We'll have to do this. We'll have to do that. And I'm just like, this is very cool, just in terms of the scale of the thinking that I'm seeing coming out now. And it's just like amazing.
Well, I mean, look at the investments we've made that we've announced recently, right? We did Canada Rocket Company, right? Like building sovereign rockets in Canada was not something that Ripple Ventures would have ever considered doing in our first fund. But now, with the cost of technology going down, the ability to attract incredible talent and bring them back to Canada and build, and the support you obviously have from the likes of government, it makes it a much more digestible investment for sure for investors like us.
Let's say maybe go a bit deeper on this.
Sure.
What's a company that's just wowed you? And it doesn't have to be one you invested in. Obviously, those are always great, but maybe one that's just blown you away in the last, I don't know, 2 years.
In our portfolio, I would say like there's ones that I just never thought would be possible. We have a company like Clover. Company is started by a young Ripple X fellowship graduate, Matt Espinoza, and his co-founder, Ryan Kaufman. And the first time we had met them, they were young. They were like 18 years old, sold a company for a little bit, rolled it, sold another company. He had been kind of executing pretty well as a young kid. And then when he came back to kind of start his next company, we were interested because of him. And the idea was to basically build agents to manage subreddit channels and like growth hacking across like social platforms for businesses. And we're like, yeah, we'll give it a shot because of Matt and his team and what we've seen before. But really, like the product was not even built yet. And so we backed it. And within like 6 months, the company had grown $6 million in revenue and run rate. It was like insane. And they'd only raised like a couple $100,000 to get there. It was fanatical. Like I could not.
We're a happy customer of said company. So I'll
perfect. Okay. So
Yeah.
so that was the other thing is like my partner and I, we truly didn't believe it. Like, you hear these things on a call and you're like, okay, sounds great. Like, yeah, all things sound good. Can't be good. Right. And so we're like, well, let's see the Stripe receipts. Right. Let's see the contracts. And they were actually there. Like, it was really wild. And you're just sitting back and like, wow, the times are changing. Right. Like, this is not the safe strapping, seed strapping thing is real. And I want to go back to this philosophy, maybe, if you don't mind, like how we've evolved, because over our first few funds, we were backing, technical founders, building an enterprise software, large underserved markets. That really hasn't changed, but the opportunity has really changed and evolved. We are seeing same companies over and over. We've got AI for healthcare, AI for sales, AI for marketing. There's little differentiations. Some of these companies have very short runways. You've got crowded markets, crowded products, all the same. And we do pass on most of them. We see like 10,000 companies a year. And enterprises, they're not really as easy to sell to. Never that they were easy, but it wasn't a lot of competition when you were selling something specific to the problems they were facing, because they don't want to buy tools anymore. They're now trying to get everything into like ready to go platforms with AI ready to go inside of it. Right. And that data moat that we hear about all of a sudden, like with like Salesforces and things like that, is real. You can't just replace data moats overnight. And so it's very important that venture firms understand that, because of how the market is changing with AI, and it's kind of compressing the value of where buyers want to get value out of their products in real time, right? We're moving from that SaaS world to the like return on investment, outcomes based world as well. So we have to judge companies very, very differently than we've ever done that before. When we
Yeah,
had
this is
telemedicine businesses and things, those were easy to understand.
yeah. I'll just chime in here for just my lens on this. It's gone from I ran worldwide sales for Pivotal VMware for a piece of time, and deals were in the eight figures. We had 9-figure deals, and the amount of effort to do that was substantial, but the payoff and upside was there. Now you're seeing levels almost in the same order of magnitude for deals that are, a tenth the size, a hundredth the size. You've got to really come up with, and what that speaks to is clearly it's the wrong form factor. You got to switch that form factor to be something that's quick hitting and immediate, right? Like that's kind of the reality of it. So it's just been interesting to watch that whole lens and kind of the way to do
Mhm.
it.
And the talent wars are real too, right?
Yeah.
So the talent now for us is important for us to really focus on. We're seeing researchers, AI experts that we've tracked for years, building in physical applications, really complex tech stacks, biology, aerospace, defense, advanced materials. They're coming home now after spending time at SpaceX and Anduril and top AI
Yeah.
labs, and they're getting ready to build.
Yeah. No, it's super interesting. It's been a huge switch, and that context matters now, right? And that ability to recruit the next person, especially now that we can get into some of this stuff, but like everybody can write code now, right? Like meaning everybody can get in front of a coding prompt and do something, whether it's
My
good,
friends
bad,
in real estate are writing code. They've never even looked at a line of code in their life.
right? So that's really changed the whole landscape. So what is it that you're bringing, right? That's really one of the key things that we've been spending time on, just as generally for our company and generally as just a community. So that's been one of the big ones. And I'll pick from my side. I've been watching these coding tools over the last, I don't know, 2 years or so. Every venture firm went after one to create one, whether it was Cursor, Lovable, pick the one. Base 44 was his own company, but like everybody went after one of these things, and the question is okay, it's just a menu item. You can displace any of them at any time, but they've stuck, and it's blowing my mind how big they've gotten, and how fast. Any thoughts on these?
Yeah, a lot of thoughts. I agree. The whole cursor is dead kind of thing is still boggling my mind when you have Claude Code. What I always try to remember, though, is you and I and the rest of the tech world, we kind of live in a bubble,
Hmm.
and we kind of only talk to each other. And when you don't talk to people outside of our ecosystem, you don't realize how big the world is and how slow it is to adopt things. So for the first time, like when you see cowork for the first time, you're like, wow. And you're like 1% of people who've figured this out because you live on Twitter, you live in the ecosystem. And like there's a whole other world out there that is only going to see it 6 months from now. So every new feature we see is like, boom, lights exploding in your head. That's going to happen to somebody 6 months from now too. And so with Cursor and some of these other tools out there, I do think the displacement will happen. We know our companies internally are cutting stuff. It's kind of like how when you learned about AWS, like cost associated with AWS billings when you were building companies, you're like, why isn't Amazon stock moving? Like, why don't people understand how big of a business this is inside of Amazon? Like, that's sort of in our world what we're seeing. And I think it will happen. Like, we've had companies, and ourselves included, we've turned off all of our OpenAI ChatGPT spending. We're not using it anymore. We have companies that have gone 80% Claude code, 20% old codex, a little bit of Cursor because they like the CLI, or they don't need it though. They can move and they will move. So I think what we're talking about just takes a couple times of iteration to kind of trickle through. Some people are on your annual contracts, things like that. So if you look at even the code contributions to GitHub, I think it was like 4%. The last thing I saw, it's going to be 20%. They said by the end of the year of all code contributions to GitHub.
Amazing.
So that's where I'm saying it just takes time to build up the momentum for things to change in our industry. But when it happens, it will happen very fast. It's right now figuring itself out. But in terms of our companies that are building something now that we think is valuable, but could change in the next Claude release, it's very scary. And so what we've tried to do is focus on infrastructure plays, things that have a longer duration of support around it, like 10xing video inference models, like things that will be valuable today, but also several years from now, because the volume of things happening around infrastructure and AI is going to just continue to grow. Whereas if you're building a feature or a tool right now that somebody else can basically replicate and reproduce, and you're hoping that they just don't switch because it's already signed in with your username, that's not something we want to be backing.
Yeah, we spend a lot of time. It's like on our thoughts and whiteboards and Slacks channels and etc. Like, what's the moat? And the moat used to be something, and the moat's changed tremendously. And sometimes the moat is momentum now, and it's very interesting to watch this.
Well, I would say that the relationships are key. I still believe the old relationship kind of philosophy of
even more so today than maybe 5 years ago.
More so today than ever, right? How to Make Friends, right? That famous book, right? And I think that kind of still has relevance today. I think what we talk about, and I've said this with my friends, I think there's going to be a huge revolt against AI slop and AI authenticity. Like, imagine you and I were texting, for a year, my style, but all of a sudden it sort of changes. And I'm like, I'm too quick to respond. And you're like, wait, am I actually talking to Matt or am I talking to AI Matt? And people are going to revolt against that. And they don't want to be that way.
My first inkling of that is Apple's redone the keyboard, and it's
terrible.
I'm not sure what they're doing. I haven't looked into it, but it's something along the lines of, it used to auto complete based on your history. It kind of went through that angle. Now it's auto completing based on their entire data set, and it's like, whoa, why would I say that? Like, that's not my child's name. Like, it's just
so bad.
Super interesting. So
right, that's why I got Whisper Flow, because I was sick and tired of typing on the keyboard. I couldn't handle it anymore.
There you go. So let's talk about generational companies. So historically, every decade there was a company, right? Genentech, Cisco, Google, Facebook, and kind of the thing. And now the scale of those outcomes are happening in the private markets, times 10, right? Like, it's just mind blowing. What do you think you can spot today? What are some of the characteristics as a generational company for you?
I would be foolish to sit here and say I could spot a generational company when I have yet to back one. So first, I'll say that unless you've backed and lived inside an org that has become a generational company, I don't think you should be sitting on an armchair talking about it. For example, I went to the Upfront Summit and I saw Antonio Gracias speak from Valor, very famous investor, worked in the government recently. He lived on the floors of Tesla and SpaceX with Elon. When that guy talks about what he thinks is a generational company, I believe what he says, because he's seen it before. And pattern recognition isn't always going to lead you in the same direction, but it's a pretty good indicator of how to find crazy founders that will do it. And so one thing that we try to do when we look at building generational companies is one is, do they want to go on the VC journey to begin with? Right? Because that is not something for all founders. We've had founders get off the train when they're like, I'm done raising after a Series A. I don't want to go and do the whole dog and pony show. I don't want to do more dilution. I want to build a business that compounds, that grows. And maybe when I want to choose to sell this thing, I sell it, and it makes life-changing money for me and my family and our early investors, but I don't want to do this whole like raising $1 billion every single, 18 months kind of thing. So that's something you have to clarify right away with founders. The other thing too is like, are they obsessed with the problem and not their vision of the product they want to build? Like truly obsessed with changing the world with a problem, not with a solution, is something we obviously ask about. Because the motivations, like money is not a motivation. I don't believe in for the great generational. I don't think Toby is motivated by money. That's like guaranteed, right? So I think like when you see a founder doing as much coding as he's doing right now, he's obviously not motivated by the money. And so those are the things you have to spot in the founders. And so they have to be pretty spiky. They have to be pretty deep into the weeds of all the things that go wrong in their company and understanding first principles why they went wrong. I hate when founders on board calls will be like, yeah, we missed the quarter. We really like, they use like sports analogies. We just got to rally the team, rally the troops, get back on base and hit singles and doubles. And it's like, what are you talking about? Please just stop with the analogies of sports. Like stop with the whole family dynamic and all that. Like tell me first principles, what you figured out went wrong and how you're going to fix it. And when a founder obsesses around the things that go wrong, I really get excited. For example, we had a company that had some turnover of their executive team. And I did exit interviews with the people that left. And I took all the interviews, I compiled them all, and I shipped them off to the founder. And it's a young founder, so you never know like what their response is going to be like. They could be pretty spiky. They get defensive. Well, this is how we see it versus them. They wrote back an incredible response. They took it on the chin. They said, we're already making changes. This is exactly the feedback we want from our investors like you. We appreciate you going into, getting this information, and let's have a call on Friday to discuss how we can make this thing work. And then like this whole week, we would just be getting updates on all the things that are going to, I love that. That to me is a generational potential founder.
Ooh, like that. I think, what should founders be looking for in partnering with investors? That was something I was thinking to ask, but you've kind of laid it out for us here, right? Like willing to get involved in things that are very important at a sleeping on the floor level, being there. There's just a bunch of things that you've gone through that I think are super helpful in being there for the founder that I think, kind of, if I'm a founder, I'm looking for those when I try and find these VC partners. So pretty awesome.
We have a company, for example, like going through an acquisition now, and we obviously had known about it. We helped negotiate. We brought in support, and we were there through the whole journey. So there was no like surprises, and we were one of the largest investors, and so we were all like getting this thing across the finish line. There was one investor that kind of like put his neck out and was holding up the whole transaction, and for nothing, like literally for nothing. And I was about to get on the phone and like kind of read this person the riot act. And then I had the founder just say, listen, just call the person up and explain to them, VC is a reputational long game here. If they are trying to do something that is punitive to everybody, including the founders, but only benefits them, people will remember that. And so what I always try to make sure people understand in this world is like, the people you see on the way up are the same people you see on the way down. And people remember the times that you were there to support them in the bad times and the good times. So for us, when companies are going through tough times, or when things are not working out, they have to sell or they have to find a buyer or whatever, shut it down, we actually spend a lot more time on those things because of the reputational implications for us and those founders. And I can't tell you how much those have paid off more than just the ones that work out perfectly, which rarely happens. But let's just say it does. The ones that don't work out, those founders that we were there to support during the really tough times, psychologically and physically, we are getting great referrals, great references, great introductions, LPs, customers, everything. They keep wanting to pay us back because we were the only ones there for them. And that is one of the most important things I would say.
What are some of the areas that people aren't looking at today that you're looking at? Share some secret sauce here.
I can't share everything. All right. Well, listen, I think the most interesting technical founders right now are building at the intersection of software and like physical systems. So, not like hardware companies per se, but like hardware companies that happen to use software, right? You got software enabled deep tech platforms like the Canada Rocket Company, which is super exciting for us. And our job is to back them before anyone else sees them. So we just recently backed a company called North Vector Dynamics. They've got computer vision, guidance software, autonomous systems, baked into their hardware stack. And with Canada Rocket Company, they're building all of this in internal coordination and manufacturing with software on top of its engine stack. So you've got this really interesting time where software is becoming much more easier to build in the physical world and incorporate it. You just saw what like Travis Kalanick announced with Atoms, right? He was sharing recently how, the whole cloud kitchens was just a preview to what he's really trying to do, which is taking the bits world and converting that stack, right, between like the CPU, the servers, the networking into the Atoms world. So he's trying to digitize the atoms world. So he's got a mining company, a real estate company, and what was the other one? Supply chain, I guess, right? So computers analyzing it towards the way computers are being built. It's really interesting that we are seeing the same things in our world. So we're doing some stuff in the biotech space. We're super excited about the ways in which AI is going to change the ways in which drugs are obviously produced. So biomanufacturing, we've got incredible investments like Catalyze, which are building agents to help run large biomanufacturing facilities for the pharmaceutical industry. We've got companies like Blank Bio that are helping out on the drug discovery side, preclinical things like Zero Shot Biolabs. And then we've got really interesting companies as well that are just trying to really scale the back office automations for some large industries. You think about the insurance industry, you think about the healthcare industry. It's really incredible. And what we're seeing, as I mentioned, like, and on the video inference side, there's deep technical moats that you can build with video inferences. You've got rare talent in machine learning that have a proven track record working at frontier labs that are now willing to leave those places and start new companies in Canada. And we're excited to be backing those founders.
It's amazing. You've touched on so many different things in terms of areas of expertise. It's really impressive. There's software, there's bits and bytes worlds, there's the intersection of tech and biotech. There's just a bunch of really, really, really interesting things there. So
Yeah.
I'm excited to
One
see.
thing I'll say, we're kind of eating our own dog food too now for the first time. Like last year, we launched our own internal operating system called Ripple OS. And at first, it was like a way for us to just build automation and systems around the way we're running the firm. And now it's gotten to a point where we have about 12 agents running, doing a lot of the jobs internally, but it's also helping us provide tremendous value back to our founders in real time, better and faster than their Series A or Series B or later stage investors are. It's kind of crazy when you have firms that are like billions under management, incredible management teams and operations platform teams, and our small team is able to do more. It's quite rewarding to be able to do that. We just ran a bunch of fundraising rounds for our companies. I think about 4 in the last quarter, and like all of the leads investors and all the kind of the documentation, the pitch decks, the data rooms, the process, everything was run by us. And it was really because of our Ripple operating system that helped us do that.
That's amazing. Tons of value adds. Let's maybe get a couple of things here and then get into some quick hits at the end here. But how about for yourself? You talked about a lot of the community. You talked about, your long-term goals and things like that. Maybe some other insights on you that I think, founders should know about as they find you, and LPs as well.
Yeah. Look, I mean, I'm 41 years old. I told my wife I'd I was going to sign up to this for 25 years. It's going to be the longest job I ever will have. And so far it's almost there. I mean, I was, 10 years in the finance world. So I'm getting there. I love my podcast. It's an incredible thing that I've just kind of like grown to really love. At first, I don't know about you, but I was quite scared and quite like kind of shy about it, being on camera and putting myself out there. Now I just absolutely love it because it's a great way to meet amazing people and connect with people. You get to meet some celebrities, some awesome operators, founders, investors, and the like. And, having now be one of Canada's #1 startup podcasts, I find it to be almost like a duty now to continue to deliver great information and content. So that's a really important thing that I hope to do for a long time. And I do love having such a young team around me. My partner Dom, he's not so young anymore, I guess, compared to the rest of our team, but he was when he started. And I find that in order for me to stay young and relevant, I need to surround myself by really young people. I know Chamath talks about this a lot with like his 80/90 initiative. And I think it's really true because not only is like there a language that they speak that's differently, but like the way they interpret certain ideas and personas when you're meeting with young founders and builders is really interesting to hear their perspective versus my preconceived bias. We host these hackathons at our offices every month, and like these people come in with some pretty wild stuff. And it's just so amazing to see them do what they're doing, but knowing they feel pretty awkward and shy when I'm in the room. So I kind of have to leave for them to feel more comfortable sometimes.
That's awesome. I will come and participate in one of those.
Oh, you got to come. We'd love to have you. Yeah. We call them dwell and swells.
Yeah. All right, so let's get to some of the quick hits. If obviously your Tank Talks is doing very well, go check them out on any of your podcast applications. 3 quick ones for you. Favorite piece of advice?
Oh, man. One of the ones I continue to listen to is like the people you see on the way up is the same people you on the same people you see on the way up are the same people you see on the way down. And I try to remember that every day because it's hard. You're not going to please everybody, but I always try and think about like the ripple effect. One small good decision to help somebody could change their life. And I don't mean that in like I have like the powers to change people's lives, but I'm always willing to like use my network to help people, young people get into the industry. And sometimes I sit there, I'm like, why did I take this call? I have so many stressful things happening around me right now that I'm trying to deal with. But this one, 15-minute call with some young university student trying to get into finance or venture, they will remember that for a very long time. And that may end up becoming something that's valuable for us in the future. But like, I always try to really do that and try to help the people below me because I remember the people that helped me a lot and gave me a lot of their time. So I continuously try to do that as well.
That's awesome. Paying it forward. I think I'll chime in there. I think there's nothing more important you can do because somebody did it for you, and
Someone did it.
For someone else. And
People still do it for me. Mark Suster at Upfront did it for me, and I'll never forget that. He was so busy running his conference, and the night before the conference started, he fired off like 10 LP intros for me to like really big US LPs, and I was blown away. I was like, man, this guy is really, really generous, and I'll always remember that.
That's amazing. Last book you read?
I'm reading a book right now. I can continue to read it. I read it every single month. It's Tom McCullough from Northwood Family Office. Wealth of Wisdom. I read it every so often because there's like little chapters in it. So it's called The Wealth of Wisdom. It's basically a guide on how to think about like net worth, families, being wealthy, charitable giving and structure around having a wealthy family structure.
Very cool.
I don't know if it's cool, but it's okay.
I think nice. Just opining on it. I think people end up in a situation.
Okay, I'll give you an example. There's a chapter I just read about a story about a taxi driver driving his kids to school every day. And the son in the backseat says, he sees like, a beautiful building. He goes, Dad, who owns that building? Or does someone own that building? And the father says, yes, somebody owns that building, son. He goes, do you think they're happy? And the father says, well, I don't know if they're happy. And the son says, well, are you happy, Dad? He goes, yes, I'm very happy because my kids, I get to see them every day. They go to school. We have a home. We have food. And I'm very happy. And I was like, oh, wow. Like that man's views of healthy and wellness and happiness to his son is really important to them, because where they came from in this world probably did not have a lot of those things. And so it's just like those kind of like excerpts you kind of hear like reinforce this idea of like, okay, like you don't always need to have the biggest house in the block to be happy. We hear that all the time. It's very hard to live in a life with those things when you do have some of those things. But this book has a lot of these wisdoms around wealth that I think are just great to always relearn.
Amazing. Last one, favorite place that you've ever visited?
Hawaii, for sure. Road to Hana in Hawaii. I went with my wife. We did a hike all around the different islands in Hawaii. We did this crazy hike through a rainforest, waterfalls, rivers. And then to get to the final end of the hike, we had to swim to get to a waterfall. And it was the most beautiful scenic place I've ever seen in my life. And the craziest part about it was someone else was on the hike with us, and they proposed under the waterfall with a ring. So you got to
Amazing.
remember, this guy traveled with the ring through all this hiking, through the swimming part, onto the waterfall ledge, and proposed. It was like the most unbelievable memory I've ever had in my life. So that was
Great.
probably the most special place. Road to Hana in Hawaii.
That
Maui.
seems like a good place to wrap it. Thanks for that. Thanks for sharing, and thanks for, giving all the candid advice and thoughts. I think they're really great tidbits for the founder community, LPs, and everyone out there.
My pleasure. Thanks for always having me.
Peace.